Hey guys, welcome to Investify, where we help you grow your wealth through smart investments. Get ready to unlock the secrets of successful investing in September 2023. As we delve into the wisdom of the legendary Charlie Munger, discover the ultimate stocks that can pave your way to riches even in the face of an impending market crash. Stay tuned because this is your roadmap to financial success. Number 1. Green Brick Partners Incorporated. Green Brick Partners is a respected home builder known for creating value in neighborhoods. They offer various home products including luxury homes and are active in land development. What makes Green Brick Partners appealing is its discounted valuation and strong momentum. Despite housing market challenges, they've shown robust earnings growth, record home closings, and revenue in the latest quarter. Their 27.6% home building gross margin highlights their operational efficiency. While concerns like rising mortgage rates and a potential recession exist, companies like Green Brick Partners have proven resilience. They're strengthening their balance sheets and optimizing operations. In quarter 1, Green Brick Partners beat expectations with an EPS of $1.63 and revenue of $456.2 million. Net orders increased by 51% year over year to 822 homes, showing their strength. Considering these factors, Green Brick Partners, with a market cap of $2.2 billion, appears to be a compelling long-term buy in the construction and home building sector. Number 2. Sterling Infrastructure Incorporated. Sterling Infrastructure Incorporated is a standout player in critical infrastructure construction, specializing in tech-driven projects. E-infrastructure, a key focus, contribute over 50% of its revenue with robust margins. Remarkably, Sterling has delivered 9 consecutive earnings beats, exemplifying its strategic prowess. In quarter 2 of 2023, it exceeded expectations with an EPS of $1.27, surpassing estimates by 34 cents, and revenue of $502.33 million, beating estimates by $27.91 million, despite industry challenges. Sterling's valuation is compelling, with a lower forward price-to-earnings ratio than the sector average and an attractive forward price-to-earnings growth ratio. The stock's upward trajectory, more than 70% year-to-date and more than 145% in 1 year, underscores its growth potential. Sterling aims to capitalize on economic recovery and U.S. manufacturing resurgence, backed by recent high-profile awards from Hyundai and Rivian. Well, before we continue, remember to show your support by giving this video a big thumbs up, subscribing to our channel, and ringing that notification bell to stay updated with our latest content. Number 3. Carnival Corporation. Carnival Corporation is making waves as a post-pandemic investment. With a fleet of over 90 global ships, it's capitalizing on the surge in consumer spending on services, particularly in early 2023, showing a 3.5% average spending growth. Carnival's impressive second quarter performance, beating EPS expectations by 2 cents at negative 31 cents, and revenue soaring 104.54% year over year to $4.91 billion, is a testament to its rebound. Strategic ship deployments in high-capacity regions like the Caribbean and Mediterranean are fueling growth. While risks linger, Carnival plans to gradually increase prices over the next 5 years, bolstering brand equity and fostering revenue growth beyond cost hikes. Number 4. Delta Airlines Incorporated. Delta Airlines Incorporated is highly regarded by Morgan Stanley. With cutting-edge tech, top-notch amenities, and accolades from Forbes, Fortune, and the Wall Street Journal, Delta excels. Key to its success is attracting loyal flyers, commanding premium passenger revenue. From 2015 to 2019, Delta maintained a remarkable 0.0409 revenue-to-cost spread. Quarter 1 saw record-breaking revenues up to 45% year-over-year, yielding nearly $2 billion in free cash flow. anticipating Q2 EPS of $2.36 and $15.46 billion in revenue. Delta's growth is promising, boasting a 33.51% forward long-term growth rate and a 410% year-over-year EBITDA growth. Delta's trading at a substantial 60% discount with a forward price-to-earnings ratio of 7.22 times, making it a compelling investment opportunity. Number 5. American Airlines. Currently ranked third in the airline industry, American Airlines offers an enticing investment opportunity with a forward price-to-earnings ratio of 5.83 times, significantly lower than the sector median of 17.69 times, presenting a substantial 70% discount. Additionally, the forward price-to-earnings growth ratio showcases a remarkable 97% difference. Despite facing challenges and being labeled unreliable, American Airlines has rebounded post-pandemic with consecutive earnings beats, backed by 17 analysts revising estimates upward in the last 90 days. In Q1, the company reported nearly $1 billion in profits, a substantial improvement from the same period in 2022, driven by a focus on strengthening the balance sheet, resulting in record Q1 revenues of nearly $12.2 billion and total liquidity of $14.4 billion. American Airlines maintained a strong operational performance, operating over 476,000 flights in Q1, attributed in investments in their team and technology. In conclusion, both Delta Airlines and American Airlines present compelling opportunities for investors with promising growth prospects and significant discounts. These airlines are top picks for the second half of 2023. Poised for potential high returns when building your portfolio, take a closer look at these picks. In summary, these top-performing stocks for the last quarter of 2023 and into 2024 embody the essence of Charlie Munger's investment wisdom. They offer a compelling blend of growth potential, robust fundamentals, and innovative strategies spanning diverse sectors. Even in the face of challenging market conditions, these companies have displayed remarkable resilience and adeptly seize opportunities arising from evolving trends. As the company rebounds and industries adapt to changing circumstances, these stocks stand poised to maintain their upward trajectory, delivering substantial value to investors. They represent a beacon of optimism for the remainder of 2023, aligning perfectly with Charlie Munger's principles for navigating the path to financial prosperity and the impending market turbulence. That's it for today. Thank you for watching. Don't forget to like this video, subscribe to our channel, and ring that notification bell for more updates here on Investify.